very good morning from London. Welcome to the RANsquawk European morning briefing for today, Tuesday the 30th of August. The European markets all opening in the green this morning following the higher closes in Asia overnight, especially the FTSE 100 index outperforming its European peers as it catches up from the UK market holiday yesterday. However, as we move through the European session, there's been a distinct increase in risk averseness, culmination of a few factors. Firstly, the headline front page of the Wall Street Journal Europe edition this morning saying that Germany's Merkel faces increasing resistance from within her own coalition against the EFSF ratification that needs still to be put through German Parliament. They've already suspended the vote on that by a week in the Bundestag. Also some comments from a senior German lawmaker saying that any future Eurozone bailouts will need to be put before Parliament and therefore increasing the process there. Interestingly, in the front page of the FT this morning saying that the European Banking Accounting Body has warned that European banks have not written down enough Greek debt. So that has spooked the markets also, but the main catalyst for the risk averseness this morning has been the Italian BTP bond auction results, which were hardly anticipated this morning, and especially for the 10-year BTP, the yield Italy have paid there becoming in above the psychological 5% level at 5.22%, and we did see a big sell-off on the equity markets on the back of that, especially the banking shares coming into the red across the Eurozone. However, the UK banks still outperforming as the index also outperforms there. In terms of the reaction in the markets then, the dollar index has seen some good flows coming into it, up above 0.5% on the day. We have seen a sell-off on the euro currency on the back of all the negative comments, and we have seen some flows into the safe haven currencies such as the yen and the Swissy. However, the Swissy has been weakening in recent trades slightly, some comments coming back into the focus from yesterday, the SNB, or the Swiss government rather, saying that they had discussed a strong Swiss franc and they are to announce any measures if they have been taken at their weekly meeting tomorrow, so we'll just keep an eye out for there. The strong dollar index then, weighing on the energy complex WTI and Brent crude futures, being sold off quite heavily in the European session, and fixed income consequently quite supported the bunds moving back above the 135 handle to the upside. Looking then at the rest of the calendar for today, the focus in the US session will be on the US consumer confidence and the FOMC minutes, with the API crude oil inventories to follow later on in the US session. Just worth of note, there are some Fed speakers today, Lakota, later on in the US session, who is a voting member. But that's enough from me. Have yourselves a great trading day.